What's up, guys? Welcome back to DCA. So if I asked you right now, how much money has been invested into Bitcoin? Would you know the answer? Would you know how to find that answer? So I think a lot of people's first reaction would be to say it's the market cap. But the market cap is simply the price at any given time multiplied by the total supply. Okay, so that's how we arrive at our $800 billion number that we have right now for the Bitcoin market cap. Looking at a metric that can tell us how much money has been invested into Bitcoin can be immensely helpful. And if you invest in stocks, for instance, you have no chance of having this type of information. And this is why I keep coming back to the fact that on-chain metrics are so useful for determining the underlying mechanisms going on behind the buying and selling of Bitcoin. When you're in times like right now, where the market is trending downwards, on-chain metrics can really help you dive into the numbers and determine exactly what's going on. So we're going to take a look at this metric today called realized price and realized cap, which can tell us how much money is actually invested into the Bitcoin network. So we're going to look at that today and show where we might be going in the future based on that information. So if you guys like this type of content, hit like and subscribe. You can head over to the Discord channel to sign up for the DCA Index Risk Model. This is a machine learning algorithm model that I have developed, which is a free trading view indicator. So you could go to other places and pay, I don't know, about $130 a month, or you could get an indicator which tends to do a little bit better. I'm just saying, and it's free. So it's up to you. But with that said, guys, let's jump on in. Okay, guys, so let's talk about what realized cap and realized price are. So the orange line represents the realized cap. The blue line represents the actual market cap. Now recall, market cap is simply the current price times the total number of coins. So we know Bitcoin right now is around $43,000. There are 19 million coins. In other words, that gives us our value of our current market cap, which is around 800 billion. In orange, we have the realized cap. So what this is, it takes every coin that has been bought on the Bitcoin network or transacted on the Bitcoin network, and it says what was the price of the coin at the moment that it last moved. Because that is a representation of how much money has actually been invested into the Bitcoin network. So if you had, let's say you have coins sitting at $100 or $1,000, those will contribute, that much money to the network. So if you have 10 coins at $100, that is $1,000 that you've invested into the Bitcoin network. Now they may be worth much more, but until they move, only $1,000 of capital has been put into the network physically. All right. So until you actually sell them, they're only counted for that $1,000. Now, if you sold those 10 at $43,000, that would obviously be worth $430,000. And if you did that, then they would become $430,000 added to the cap. The realized cap is simply put, how much money has been paid for all of the existing Bitcoin. Now, let's assume you bought a Bitcoin at $69,000. Or so let's say $70,000 just for round numbers, and then you sold it at $35,000. Now the cap will fall by $35,000. Basically, it just looks at all of the prices at which people have bought Bitcoin and adds them together and gives you your cap. So it's a much more true value of the network than is the actual market cap. Okay, guys, so we're going to start our analysis here in 2018, right after our blow off top that occurred in December of 2017, leading into January of 2018. So notice just, right here, the realized cap, which is, remember, the actual amount of money invested in Bitcoin, just blew up right along with the price and then sort of levels off here in January. Okay. You see the price falling, but notice the actual amount of money invested in Bitcoin. This is what a lot of people don't realize. In spite of the fact that the market cap plummeted, I mean, going from around 330 billion all the way down in February down to 115 billion. Look at what happened to the actual amount of money invested in Bitcoin during that time. Not much. The actual change went from 90 billion down to around 87 billion. So $3 billion was actually lost in the total investment in Bitcoin. Meanwhile, the market cap dropped from 325 billion down to here at 115 billion. So losing over $200 billion while the actual amount of money invested in Bitcoin barely changed. Then, we continue into this bear market here. And remember, you have to remember this, the market cap is simply the price times the total number of coins. So it's just the price that people are willing to pay at that instantaneous moment. So it's not the actual amount of money that has been invested into the asset. So what we're saying here is, in short, once you get to this peak and then start to form this area, there's no more new money coming in. This is all new money that led into this bull market. It's all new money. This is all new money coming in, people buying older coins for a higher price than they've been held at. Now, here, no one's willing to do that anymore. Okay, so, you don't have to have necessarily some capitulation event, but the way a market works is if no one's willing to buy at some certain price, then the price will drop until a buyer is found. All right. And that's what you're seeing here. So your price is dropping while the actual amount invested in Bitcoin is relatively static. In fact, we sort of oscillate right here between 91 billion and then over to 86 billion before our capitulation event. And then what happens? Well, we drop down to this level here. So we hit a baseline right around here at around 76 billion. Okay, so that is the true price paid for those coins. But what we see is just this massive drop in price, which leads to a massive drop in market cap, which goes from 112 billion all the way down to 56 billion. And now this is important. This is the critical part of this. These times when the market cap is below the right here is below the realized cap, that means the network on aggregate is sitting at a loss. Okay, so in general, people that are long-term holders, there is no way in hell they're going to sell their coin to you when they are sitting at a loss. These are guys that are going to buy when the price is down. They don't care if they're down for, a year or 2 or 3 years even. They're going to hold, and then they're going to try and sell it to you when the price is shooting up to new all-time highs. So these times here, and if we just zoom out, you can see this. These times here, when the network is at an aggregate loss, so in 2018 and the first quarter of 2019, COVID capitulation event, basically all through 2015, and then here for a short time in late 2011, these are the most opportune times to be buying Bitcoin because the long-term holders are forming essentially a stonewall level of support at those levels. So unless something fundamentally changes in the value of Bitcoin or the way that individuals are valuing Bitcoin, this will continue to remain true. It is invalidated if there's some fundamental shift in the way that Bitcoin is evaluated. But at the moment, I don't see such a thing. So I would contend that this will continue to be true. All right. So that's all well and good. But let's take a look at, instead of the market cap, let's see the actual price to put it in price terms. Okay, so here we're looking at the realized price. So all this is exactly what we were just looking at, but divided by the total number of coins. So it shows you essentially the average cost of Bitcoin the last time that all of the coins combined moved. And I should note, it does not include the coins that are held in Satoshi's wallet or coins that did not move or have not moved since 2009. Those are deemed to be lost and are therefore excluded from this value. And that simply gives you a more true picture of how much money is invested into Bitcoin. So there's two things we're going to look at here. First of all, notice how we hit our peak over here. We hit an initial peak in April. Okay, so we hit a peak price of right around $64,000 in April. And notice how that in spite of the fact that we hit a price peak, we continued to make over time, we continued higher with the realized price, meaning people were still coming in and buying older coins even after we hit our price peak. But what you're seeing is in spite of the fact that we've seen these large price drops like we saw here in May. So if you look at the capitulation that we saw in May, look at the total change in the average price of Bitcoin held. And it went from around $20,000 right here. So sitting at $20,000, and let me move the camera. So sitting at $20,000, and it went down to around $19,000. So it barely budged in spite of the fact that the price dropped from $64,000 all the way down to around $30,000 or $29,000, whatever it was. Then we started to see new money come into the market. In fact, right here in August, we actually reached a new all-time high for average price of Bitcoin held. So you can see that here in August, we got back to this price at around where we were right here, sitting at around $20,000. And then we started going higher. In fact, reached a peak right here at around $60,000 when we were in November. So that means there was still new money coming in. It wasn't, anything exceptional, but there was still new money coming into the market. And that's where we're still at today. Okay. So the average price at our peak, the average highest price for Bitcoin was right here at around $24,600. And right now we're sitting at an average price of $24,261. Okay. So anytime someone who owns a Bitcoin that they bought for less than $24,261 takes that Bitcoin and sells it to a new person. And if the price is above this level, if it's above that $24,261 level, then that Bitcoin becomes repriced at that new higher price and this value will rise. All right. Now, if the one exception to that would be if someone who owns let's say a $69,000 Bitcoin sells it while the price is $41,000. So someone who capitulates, anytime you have a capitulation, then this will go down. So we're always counterbalancing the people who bought high and are selling low. In other words, typically the retail market, because almost no one else is doing that. And we're counterbalancing that with long-term holders who bought low and are selling high. So smart money, dumb money. So smart money is buying down here, selling to people up here, whoever's up here buying. And then dumb money is buying up here and then selling down here. And that's how you get, this type of situation where where the total amount of money invested in Bitcoin is sort of reaching a point where we're going sideways. So like an accumulation phase. So if we just zoom out and we remove the price, so we're just looking at the realized price now, not the actual price. You can see that this progresses through each market cycle in a very predictable manner. You have a parabolic phase where long-term holders sell their coins to new investors or people at least willing to buy at a much higher price. This reaches a peak and then you get a slow trail off. Okay. And then once you reach the trough, then this starts to increase and that leads you straight into your next parabolic phase. So we see that here. You trail down, there's a capitulation event that occurs right here. Then you level off, and then the second that you start going up, the second the trend reverses and starts to go up, you're leading into a parabolic phase. It happens again here in 2013. There's a parabolic phase. The realized price continues higher in a slow cool off, continues higher, and then into a parabolic phase, and then you see it again. We have this rounded top, just like the rounded top here, and there's a capitulation event that happens at the end of 2014. It trends down for some time, and then right when you see the trend reverse, right here, okay, so right at this time, you see the trend reverse, and what happens, like once we start going up this way, it's just like we saw back here. Right once this trend reverses, okay, right around here, we start to trend up into a parabolic phase. So we trend down, level off, and then the trend reverses and we go up into the parabolic phase. Then in 2018, you see the identical thing. You see we get this rounded top where, you could call this the confusion phase. People don't know if the market cycle is actually over or not because, these massive pullbacks define Bitcoin's price movements. So, while the price is pulling back, sure, it's easy in retrospect to say, oh, yeah, that was the end of the market cycle. But you can never truly tell because we have tons of 50% pullbacks or more. So, this is the confusion phase. That's why you have this rounded top because people don't know if the cycle's actually over or not. And you still have a lot of speculative investors and retail investors trying to get into the market. Okay, so you see we have this rounded top. Like we said, we'll just pull the price off again. Rounded top, we head down. We have another capitulation event. So each time it's been identical. A rounded top, flattening into a descent, a capitulation event. Then the second that we break this trend, then we start into a build up phase into the parabolic phase of the cycle. Okay, so that brings us to where we are at right now. And I think this is interesting and I think it's open for a little debate. Now, on one hand, we had this parabolic phase, and you'll note that it's not as large as the other parabolic phases. But this is almost to be expected. It's just like the concept of diminishing returns over time. It's completely to be expected that the cycle will not continue to have, the same type of move that it's had in every other cycle. So if we just look quickly, you can see that back in 2012 after the the blow off top, and then in 2014 into 2015, and then here in 2018, 2019, the baseline levels for the realized price, which is the true amount of, or the true average price of Bitcoin held, was $4 up to $280 up to $4,400, and now we're sitting at around $24,261. So these levels tend to be hard floors. Now, the one thing I'll say is this. If you look at where we're at now, notice how we had this parabolic phase and yet we're continuing to slowly move up. Now, you could look at this in one of two different ways. First of all, you could say that, okay, well, we had our parabolic phase and now we're in something like this, something like you saw in right here in 2014, where, we hit our peak and we're sort of rounding off into what will become a capitulation phase. That's certainly a valid argument. Alternatively, what could be happening is like exactly what we saw in various phases of this 2013 market cycle, where we reached this peak, then started to come down while the realized cap continued to grow. All right, so we leveled off in the middle of a parabolic phase, leveled off for some time, and then continued the run. Where we're at right now is sort of up in the air because It's not exactly clear yet whether we are about to enter a capitulation phase or whether we are going to simply use this level here at $40,000 where we know we have a lot of support and head up further. And if you just simply look at the realized price, well, it tells us two things. Based on the shape of the curve and what we've seen in the past, I think it's slightly more indicative that we're something like this than we are something like this. But, what we saw back in 2013, you can take, a break before running up further. So I don't think there's, any doubt in anyone's mind that as far as the demand side goes right now, there's simply been a complete, drying of the well, so to speak. There's not a lot of retail interest in the market, and that's why you're seeing the price just slowly grinding downwards. And that's going to continue because, like we've seen, as long as retail doesn't come back into the market, you can have a fairly static total amount of investment into the market while still dropping price. In fact, dropping massively, going from 20,000 down to $3,300, while the investment into Bitcoin went from, or the average coin held went from $5,400 down to $4,300. So $1,000 change in the average invested price, while we saw the value of any one coin go from 20K all the way down to 3,300. So we could definitely see this continue down. And now the important thing will be to note is that if we do get below this level, wherever it winds up at, if we get below this level, that will, if history stands and nothing fundamentally changes, that will be just quite simply put, that will be one of the most incredible times possible to be buying Bitcoin. I have another part to this, guys, I'm going to do in a separate video because this one's going to be quite long and I'd rather, you know, do these in separate pieces rather than do it all at once. In the next video, we're going to look at log regression analysis of the realized price. And I'm going to show you how we can identify in the future where the baseline of Bitcoin may be based on all of the data we have so far, which isn't a small amount. We have, approximately 46 or 4,700 daily data points to analyze at this point. So it's no small data set. And I think it's worth looking at because we've seen how just with the price floor alone, the log regression analysis has been incredibly accurate over time. So that's what we're going to do in the next video, guys. So if you guys like this type of content, hit like and subscribe. You can head over to the Discord channel to sign up for the DCA Index Risk Model. It's a free risk indicator using a machine learning algorithm. It's a TradingView indicator. You can sign up for it. I'll send it out to you in a day or two. So with that said, until next time, as usual, see you.